hearty welcome to our chief guests, guests of honor, learned speakers, and all participants to our 100th centenary webinar. It is a memorable occasion for us as we host our 100th centenary webinar on excellence in corporate governance. Our journey of organizing webinar started in April 2020 when COVID-19, the global pandemic, brought business to a standstill. We thought of an innovative method of sharing knowledge by organizing our first webinar on 28th April. 22nd, encouraged by the massive response and positive feedback, we started holding webinars on Friday of every week from 4 p.m. to 6 p.m. and there has not been any looking back since then. Friends, in our 99th webinar held as on date, over 81,000 participants registered, which was addressed by over 173 eminent speakers. The USP of our webinar has been discussing in detail the various regulatory and legal updates, consultation papers, and other important developments. We deliberated the impact of changes, any issues, and complexity arising there from the best governed practices. Q&A session has been the integral part of each of our webinar, and we around 5,000 queries we have received from the participants during the webinars, and we have tried to ensure that all these queries were replied. We also provide the government and the regulators suggestion and feedback arising out of deliberation. This gave our webinar a unique identity and earned us appreciation and acceptance from various corners. The support and confidence conferred by us, by legislators, senior government officials, regulator, industry leader, and expert who are acclaimed in their respective area of specialization, became the greatest source of our strength. I wish to particularly acknowledge the support we received from the senior officials of SEBI, IBBI, MCA, GIFT City, the CSC, NSC, CBDT, industry and thought leaders and senior professionals, which includes company secretary, chartered accountant, advocate, proxy advisory firm, tax experts, management and HR consultant, IT expert, and financial market stalwarts. It is therefore a momentous occasion for us and a great honor for us to be hosting the centenary webinar on excellence in corporate governance. Good governance is an area that has been gaining a lot of attention over the last 3 decades. The government, regulator, as well as the industry leader have come out in a big way to ensure a robust framework that leads to confidence in the system and processes. There has been an increasing realization that good governance leads to value enhancement and sustainability in the long run. In all our webinars, we have been promoting and propagating good governance, and in line with that, we decided to the theme of today's webinar as excellence in corporate governance. This will give us an opportunity of hearing the views of eminent speakers on this all-time important subjects from this perspective. On this historic occasion, we are indeed privileged to have with us a galaxy of distinguished personality to be our chief guest, guest of honor, and speakers. Our guest includes honorable members of parliament, senior bureaucrat, regulator, thought leader, and distinguished professional. I heartily welcome our chief guest, Dr. Amar Patnaik, member of parliament in Rajya Sabha. I welcome all other people. So he is our today's chief guest, Mr. Amar Patnaik. Then we have Mr. Raju Bista, member of parliament in the Lok Sabha, is just joining. Mr. Prabodh Saxena, IAS, additional secretary, government of Himachal Pradesh. Mr. Amit Mohan Govil, IRS, DG, Central Economic Bureau, Department of Revenue. Mr. S.K. Monti, IRS, full-time member, SEBI. Mr. Manish Mohan Govil, IRS, advisor, law, CCI. Mr. V.S. Sundareshan, Executive Director, SEBI. Mr. Dr. M.S. Sahu, IES, Distinguished Professor, National Law University, Delhi, and former chairperson, IBBI. Mr. T.N. Manoharan, Chairman, IDBI Bank and past President of ICAI. Mr. Santosh Kumar Shukla, Executive Director, IBBI. Ms. Savitri Parikh, Company Secretary and Compliance Officer, Reliance Industry Limited. And Mr. Parvati Sam, Chief Legal Officer and CS of Tata Steel Limited. It is a matter of pride for us to have you all with us today. Now I will quickly take you through our journey of this 99 webinars, which will give you that what we have done in last 2 years relating to this. This is our 100th webinar. 99 webinar we have done till now. And if you see that we have started our journey on 28th. So the point is the CP is always, corporate professional always promoting good governance and knowledge and disseminating knowledge to the professional, to the industry and other people. This is our target, which we are doing. Our knowledge and share initiative, we are sending every month the CP Connect, CP Short, CP Newswire on various updation and new subjects. We have come out various publications on company law, IBBI and valuation, which was one of the best selling books in the country. Our knowledge sharing initiative started 2.5 years back when we started our webinar on various topics. Our first webinar was on 28th April 2020 on Q&A. This was first webinar which we have done. And after that, we have organized 99 various webinars on various subjects. These subjects include that we have 33 on company law, 28 security law, 7 deals, 7 taxation, social issues, the labor law, corporate governance, insolvency law, and valuation. We are conducting webinar every first Friday of month where we are recapping recent regulatory legal updates. So if you are missing out anything in the month, you can attend this webinar and you will get all updates on company law, security law, insolvency law, FEMA, and competition law. So this is every first Friday of every month we are doing. CP webinar, if you see the speaking numbers, that today 81,310 people have registered and total registration in this 99 webinars. Our top 5 webinars was this, the number has gone to 2,100 to 1,500 people they have registered on various webinars. 252 queries, highest number of queries we have received in one webinar and second highest 212 in labor law. So you can understand the participation of people. We have called 173 speakers across different fields, whether it's a SEBI, stock exchange, another, which is one of the indication. Our people from industry, regulator, they have participated, they have joined us. Out of this 81,310 participants, 5 top participants who attended our most webinar, we are honoring them. That is Mr. Ramamurthy Malla. He has attended 83 webinars from Bombay. 81 webinar, Mr. B.K. Subramaniam attended. 76, Ajit Kumar. Then 70 webinar, Radha Vijayaraghavan, Madam attended. And then Abdul Rahim. We thank you all, our 5 top participants for this program. Friends, what was the impact of these webinars which we have done? It is tremendous. First is empowering professionals through latest legal regulatory updates. Then we are analyzing complex issues and replying the participants' queries. We are bridging gap between regulator and professionals because we collect information, provide comments and consultative paper which government and regulator bodies bringing out. Until now, 11 consultative paper we have given suggestion to government, knowledge repository, FAQ and videos on YouTube that is available. Whatever we are doing, all 99 webinars are available on YouTube. Promoting and propagating good governance and compliances. And friends, the outcome of this webinar is that we came out to SEBI settlement scheme. We gave suggestion, delisting of securities. We have given suggestion, PIT regulation. We have given suggestion, independent directors. We have given suggestion, reforms in security law. We organized program and gave suggestion. And ESOP, we organized various programs. And these outcomes are there on the SEBI released FAQ and PIT regulation on 29th April, consists of 58 queries and their answer. That was the outcome of the webinar which we organized on insider trading. The Government of India Ministry of Corporate Affairs, we have worked for CSR, MCA version 3, reforms in company law, limited liability partnership, company law committee report. We gave all suggestions to them. Then out of this, we came out with the Handbook of Merger and Amalgamation of Government Companies, and this is a handy book for the officials as well as the CMD and Chief Executive Officer, all central PSU, because the merger for PSU is not required to go to court. They can go to the MCA, and this is a SOP for them. Then pre-FAQ insolvency resolution process came out with IBBI. That is, we gave a suggestion to them. And friends, heartened by the massive response and encouraged feedback which we have received, we want that this journey should continue. It is not completing here, 100th webinar. So this 101st webinar we will organize on 25th November on the LODR amendment. And then 2nd November, there is the first Friday of the month. We are regularly doing this, the changes in company security and insolvency law. That is our things will go on. Now, continuing our knowledge sharing initiative, we are pleased to announce latest edition of our publication, Handbook of Company Law Procedure. And I will request our chief guest, Mr. Amar Patnaik, to release this by technical process, this book on company law. We have shared this book to few of our speakers. So I request just show this book to our and open. Sir, just click Amar sir. Yeah, that is there.
Can you see it?
Yes, yes. So this is a very unique book which we have come out. The all 180 procedures are there, and this is a very handy and very interesting book, which we will send it to all our speakers. So this is our journey, and the journey will continue. The sharing of knowledge and making India a vibrant by our knowledge initiative. So friends, thank you. This is my presentation which we have done. Now I will request our chief guest, Dr. Amar Patnaik, to deliver his address on this subject.
Thank you so much, Pawan. Thank you so much indeed for this to this event. Really, really privileged and proud to be associated with your organization. I have been here before, and this is the 100th webinar that you're organizing, starting April 2020, which basically means we have past 100 weeks now of the onset of the global pandemic. And this is really creditable, and therefore it's a privilege to have been invited to speak today on this webinar. And on a topic which is something which is extremely important, and I think all my 28 odd years that I spent in the government under the Comptroller and Auditor General of India, and the few years that I have spent in the Parliament in various committees, including the Finance Committee, where I have we regularly discuss the company law, the amendments to the company law, the insolvency, bankruptcy code, competition law, several things. I realized that excellence in corporate governance is something that has to grow as a culture in the company, and it can only happen not through, of course, these lectures are important, but not through these lectures alone, but it has to grow as a culture in any organization, whether it is government or it is a private or is a semi-private organization. So I include in this, corporate governance excellence, not only government companies and private companies, but even NGOs, non-state organizations of any kind, because this is a cultural, parameter which is to be imbibed by the organization. And when I say that imbibed by the organization, it means that it is imbibed not just by the employees of that organization, not just by the directors in the board of directors or the managing director or the shareholders, but it is also by the non-state elements that grow in the company as a culture of the company. And I did not take names here of various companies who are perceived outside in different ways, because that's the culture of that particular company. So corporate excellence in corporate governance is something which is extremely important, and that's why we are probably discussing, and you have taken this up for discussion on your 100th webinar. But it is very difficult to achieve. and it is not to be achieved over a period of 1 year, 2 years in the medium term, but it grows over a period of time by constant practice and follow-up of various systems and procedures within the organization, starting from top to bottom and bottom to top. I being a civil servant earlier and now a member of parliament, I have seen that corporate governance is usually people associated with something which is internal to the company, and that is what I spoke about. But over a period of time, I have realized that excellence in corporate governance, it has two elements, two broad elements. One is the internal practices, and very important, probably more important, is the external practices. And this is less talked about. The internal practices, and this is why this is so complex, is because internal practices impact how you are perceived outside. So internal practices will impact the external practices, and the external practices will also impact how the company is perceived internally. So internal practices, procedures, or frameworks are as important as the external ones. And that is probably the reason why in the new Companies Act, we had very specific provision for, let's say, CSR, for, that is the biggest chunk about which people talk about is the CSR in the as the external component in the Companies Act, as something which is associated with good corporate governance. Now, let me honestly tell you that as member of parliament, I'm in several committees, and in every committee, the members of parliament, while discussing, I am a member of the Committee on Public Undertakings, which basically means all PSUs of the Government of India are evaluated by this committee based on the CAG report and even otherwise. Now, the only thing that the members of parliament discuss, not the only thing, but the most important thing that they discuss is how the company has performed in terms of its corporate social responsibility expenditure, the quality of CSR, the impact the CSR spending has happened. Now, many people probably think that the public representative have an implicit interest in getting these CSR funds, which is actually not true. You would find that the CSR guidelines, which is in the Schedule 7 of the Companies Act and Section 135, it is very clear, very defined. There are some discretions available, but you would be surprised to know that there are companies, again, I don't want to name, including in the, because we have had a review recently of some of the biggest companies of India, both public and private sector. And when I say private sector, we had Tatas, we had Infosys, we had Wipros. They have also come before the Subordinate Legislation Committee to explain what they have done for CSR. So I don't want to take any names, but I can only tell you this much, that the perception, when these members of parliament are discussing with a company, they have formed a perception. And that perception, which is the external perception, has happened about the company based on this CSR alone. So CSR is very important. And this is an external component of the corporate governance that you have. So if you have a strong and robust internal corporate excellence framework, which is already defined, or which is already a prerequisite in the Companies Act in the form of the composition of the board of directors, the number of independent directors that you need to have, the number of audit committees, and all that is already known to all of you, so I would not like to repeat. But what is important is that seldom the CSR activity is paid the requisite attention, even though it is only 2% of the profits that is made. My view sometimes has been that even if a company does not earn profit, I think it is developing and building itself in a societal environment, and therefore to discharge that responsibility irrespective of the profit or the loss earned would probably would be a true reflection of the external corporate governance that the company follows. the CSR may not be the only thing to talk about as far as external public, external corporate governance, perception is concerned. But what is also important to me is something which is both applicable to internal and external, more internal, and that is what I call as the FAT. FAT is a term which is used in several parlance across laws and regulations, and that is fairness, transparency, and accountability. So it depends on a company's corporate governance as to which of the stakeholders it wants to be fair to, which of the stakeholders it wants to be accountable to, which are the stakeholders to which it wants to become transparent. Now, and as you know, every company has several stakeholders, and it is a well-known fact that it is not just the shareholders, not the employees, not just the board of directors. There are several others: the vendors, the suppliers. There are several stakeholders. Now, I think that excellence in corporate governance would be considered as of the highest order if the FAT is applicable to all stakeholders. So you're not only fair to your employees, you are also fair to outsiders, to your vendors, to your suppliers, to people you deal with. You are accountable not only to your shareholders, you are also accountable to society at large. You are also accountable to government, as you should be, because it is mentioned in the Companies Act. So I think a broader picture of the framework of corporate governance, if it can evolve within the company itself as a culture, going beyond what is prescribed in the Companies Act, would be the ideal parameter of having achieved excellence in corporate governance. Now, I will pick up a few elements on this fact. I have a limited time. I would have loved, actually, Pawan, to listen to this. I'm definitely going to listen to all the videos that you have. Otherwise, I'll get it from you, because I think they would be extremely enriching for me. Even as a lawyer, I would like to listen to them, because some of the financial laws that I am, of course, associated with as a member of parliament, because they come to the standing committee, but labor codes, the several new legislations that have come up. But I can just say that, there are some elements which are very important, which is probably going to impact the corporate governance structure and framework in every company in this country. That is what was put on the public domain today, which is the data privacy law. Now, every company, both from internal sources as well as from external sources, collects a huge amount of data. Now, that data may not necessarily be used by the company for the purpose of its business. Maybe just data which is being collected as a matter of routine. But now, this law, new responsibility is being cast upon companies across the board, and not just companies. It's the data fiduciary, and data fiduciary is anyone who collects data. And therefore, this is the entire framework of since I was a member of the Joint Parliamentary Committee on the PDP bill, which was introduced earlier, withdrawn, but now a new form of the bill has come with some structures more or less the same. I can say that it follows the principle of the same fairness, accountability, and transparency. I will now pick up another issue, which is of gender. I think I have seen this during discussions in COPU meetings, that the number of women board members is in some of the public sector companies is abysmally low. And I do not really have statistics about the private companies, but I think that is something that is gender sensitivity or sensitiveness has to be there as a prime pillar of excellence in corporate governance. That does not necessarily mean only representation in the employees at various cadres of the employees, or particularly which happens at the lower cadres, but it is at the decision-making levels. How many women are there at decision-making levels, not just the board level, even levels below that hierarchy. The third element, which I think is something which should be another important pillar of excellence in corporate governance, is the the integrity of the management. The integrity of the management is not necessarily confined to compliance to the laws that have been prescribed. I think there are standards that are applicable to all of us as individuals, which we practice in our private lives. Some of it would actually, the good practices should come into the company's culture, and that would actually enrich the corporate governance framework that companies follow. I have lots more to say, but I think the galaxy of speakers that you have had, some of them I know from before, from SEBI, from IBBI, and Pramod, of course, has been a good friend. I would love to listen to them, but it's actually a pleasure to be here. I would end with that. And lastly, I must congratulate corporate professionals for this beautiful handbook of company law procedures that you have released today. I know that you have sent it to my Delhi office and I'm not there, but I'll definitely go through it. And if there are other papers that you have circulated, as you have mentioned, about which I was not aware, I would send in a request to collect some of those papers and go through them, because that would not only enrich my knowledge as a regulator, but as also a legal practitioner, but would also help me to improve the various laws that come up before us in the committees at the time of various amendments proposed by the government. So thank you once again, Pawan. Thank you to everyone who has been present here. Thank you to my colleague, Mr. Vista, who is here. I don't know whether he has joined or not. We just say hi the other day in the Parliament Annex C when we're going for different meetings. Thank you so much.
Thank you very much. Thank you, Amar Bhai. Thank you very much. We are old Jubilean. I think Mr. Patnaik, Pramod Saxena, Amit Mohan and Manish, we are all from the Delhi University, Jubilee Hall. So thank you, Amar Bhai, for your nice word and the very good advice that fed that fairness, transparency and accountability is the key. And the corporate should make is a culture, not just for the ticking box. That is the message which you want to give. Thank you very much, your encouraging word to us. So
thank you so much. So I would look forward to sending me the various the YouTube link in which I can see the videos, and I'll probably run back to you in case of further assistance. Thank you so much.
Yes.
Namaskar. Namaskar.
So now come to the our other speaker, learned speaker, Mr. Pramod Saxena, who is the Additional Chief Secretary, Government of Arunachal Pradesh, because he has worked in this area, and we can understand the governance is not only confined to certain things, it is a part of everywhere. So your views, Pramod Saxena ji.
Thank you, Vijay, and thank you also Dr. Amar Patnaik in his new avatar. I'm extremely privileged and honored to be part of the 100th centenary webinar of a company like Corporate Professional, which I have seen growing before me over the years. I'm very privileged because I know that Pawan has invited me not because of my domain expertise, but because of his affection for me. And I am also here not just for my affection for Pawan, but also for my regard for Pawan. Because Pawan has mentioned that we all belong to an institution called Jubilee Hall, and I have seen Pawan in those days. Pawan is a story which you can say maybe has been told sometime in Bollywood or sometime in many of these books. A small town boy, Kasganj, with high ambitions and innovative ideas. And on the dining table, he used to tell them, sometimes we used to dismiss it as, young enthusiasm. But unlike many others, Pawan proved himself very early in his life. So I think that Pawan is a story of inspiration, it's a story of motivation for many people, and many people who actually are struggling in the big towns of India. So thank you, Pawan. And as I was telling you, that you succeeded very early in life, and I have been a witness to your success and your progression in life. And it is only because of the innovative streak in you that you can think of this webinar, when the entire world was actually overwhelmed by the pandemic. So as I told that I am not actually a person to speak about corporate governance, and what I will be speaking maybe an outer syllabus for more of you. But I think that the governance, whether it's corporate or non-corporate, have something which is a bottom line thing. And there are various ways of defining the contemporary history of India. But I think from the point of view of this seminar and from the point of view of the panelists who have assembled here, I would like to say that the Indian history can be divided in pre-91 and post-91 phase. And the corporate governance actually has achieved a certain status and has achieved a certain statutory recognition only post-1991. This actually is very closely linked by what is known as governance in the political landscape. I would say that the most important thing which has changed over years is the paradigm shift in the definition of accountability. Because if you go by the constitutional scheme, to whom is the executive responsible? The executive is responsible to the legislature, which is very ably represented by Dr. Amar Patnaik. But what has happened, particularly in the last 2 decades, is that now there is a direct accountability of the executive to the people at large. I can give you an example of Right to Information Act, because Right to Information Act probably sometime even assign higher accountability to a common citizen than to a member of parliament. And at times, the member of parliament are actually asking RTI questions. So this is what has actually happened in terms of governance, that we have now established an accountability of the common people to the common people by the executive. And same is also true of the corporate governance, because now the corporate governance also has moved a step ahead. It says that the accountability not just only to the board, but to the common shareholders, meaning thereby that there has to be an element of accountability of the management, of the executive to the common stakeholders of whether it is government or it's a corporate organization. So to this extent, I suppose that this is a major shift in the way India thinks. Another thing which I would like to say before I come to corporate governance again, that we have now moved into a realm of entitlements. So therefore, we have right to food, we have right to education, we have right to information, and we also have right to employment if you look at the Manrega. So this is the scenario in which the democracy of the country is progressing. Regarding corporate governance, I would only like to confine myself to my experience. I had the opportunity of sitting in the board meetings of Asian Development Banks for more than 3 years. And I realized the higher the body is, probably the most compromised is the governance structure, because they are basically a platform of negotiations, a platform of arriving at understandings. So we always knew what is going to happen in a board meeting of Asian Development Bank. There were hardly any surprises. And before the board meeting, obviously at the constituency level, there used to be internal meeting. The developing world used to be on one side. And so I would not say that, despite the fact that I had the occasion of sitting in the board meeting of such a high multilateral body, I would not rate it very high in terms of corporate governance. Another institution where I have participated many times is the board meeting of BBMB, and I often say it's also a multilateral body, because what happens is that BBMB also is the stakeholders of various states. And I would see that the corporate governance is an inversal proposition to the number of big bodies being represented there. Unlike company simplicitors, where actually real issues are debated. As a finance secretary of the state, I happen to be on board of almost all the companies of the state government, and also of the companies where state government has a stake. And I would again say that unlike the public sectors where I participate, and unlike a private JV also where we are also, state government is also a part, the governance of the boards of government companies is much to be desired. They are very hurried. They are very rushed. Most of them are chaired by Chief Secretary who jump from one meeting to the other meeting. And I actually often tell these people that don't expect that the board member will call you for a briefing before the board. It is for the management of the company to ensure that they should actually seek time from these board members, particularly government officers, and brief them if something substantial has to emerge out of these board meetings. So in terms of my experience at multilateral level with few private companies, in not private but PSU companies, and one private company where we are a partner, I would say that the corporate governance in state is still at a very nascent stage. So the government has done, it has provided for independent directors, it has also ensured representation of women, but somehow I would say that there has to be a very serious discussion, and Dr. Amar Patnaik is there, and such a think tank like Corporate Professional is into the job. And let us very closely see how can we actually improve the corporate governance given the constraints. And the biggest constraint obviously is that we move from one meeting to other meeting. So this is something which I would like to say in terms of corporate governance. Rest, I am more keen to hear people who actually have better experience in the field. Thank you, Pawan, and thank you again for connecting to everybody, including Dr. Amar. Thank you.
Thank you, Prabodji. Thank you very much. You have, no doubt, you have said that I will speak on the some different aspect, but you have covered the right and you had the nail that the governance of any organization and corporate governance depends upon the participation of the management, the participation of the board. And if the board is busy with so many things, they cannot concentrate on this. So you have rightly pointed out. Thank you very much for your kind word. Now, next is, as you are aware, that today the corporate governance is a part and parcel of the Ministry of Corporate Affairs as a through company law. But for listed, company, the corporate governance comes from SEBI side. And today we have our with us Mr. S.K. Mohanty, who is member SEBI, and they are responsible for majority governance issues in India, and whatever new things is coming, that they are the regulator who is bringing the parameter, new things, innovative things. So over to you, Mohanty sir, for your kind words.
Thank you, Pawanji. Good evening to all the participants, all the speakers. And this is definitely a proud moment for you and for us speaker as well, because your centenary webinar. And thank you again for doing the right thing at the right time, and the constant feedback that you people give the think tank like your corporate professionals and other bodies, similar bodies. Because of that only our regulations and all our instructions, circulars from time to time that we keep updating to keep pace with the changing times. So this is what it should be done. It's a two-year process. The regulator cannot simply issue regulations unilaterally without being informed from time to time by bodies like you that what's wrong, what's right, or what should be done. So corporate governance is a very, very broad subject. You know, one can talk hours and hours on this subject. Different experts and eminent writers, authors, they have defined corporate governance in so many terms. For some, it may be, you know, producing goods and services consistently of same quality over a period of time. For some people, it can be a longish definition, talking about abide by rules, regulations, system, procedures, etc. But I think at the end of the day, what Dr. Amar Patnaik has elucidated, I think he can't be more right when he said that corporate governance is nothing but a way of life. It's a culture. It's a culture that has to be basically embedded into the system of the company itself. It's a company or not company or NGO, whatever. Governance and excellence in governance is certain things that everybody should abide by, because it instills self-confidence, self-discipline, and what he talked about internal governance and external governance, because both of them feed into each other. At the end of the day, the company has to come out to be a well-managed, well-governed company, and that by word of mouth or by perception or by data about the company or information about the company, it is at the end of the day, the investors know which company is good, which company is bad, which company is well-managed, and so much so that even the company, in terms of long run, in the listed space, they command premium because of the good governance that they command. So having said so, I mean, as a regulator, SEBI has always constantly been updating its regulations. The LODR, you must have observed over the period of time. I mean, almost twice or thrice in a year, definitely minimum LODR regulations get amended to keep pace with the changing times, be it about related party transactions, or be it about composition of the boards, or be it about role of independent director, or audit committee, or risk management committee, or NRC. Or, I mean, the regulation 17 to 24 talk about the board constitutions. We have a regulation 4 in LODR, which gives general basic principles of governance, so do's and don'ts, all ethical principles. But I mean, what is good governance is definitely a good governance in layman's language. Nobody has to really define in terms of regulations or instructions. So, I mean, basically all those basic principles that go hand in hand with a good governed company can be said that it should be, the management should be fair, transparent, and it should adopt practices which really has internal quality controls and better product and service quality, positive customer experience, acceptance by the management. That is the most important. Acceptance by management of the rights of the shareholders, and they should believe in themselves that they are the true owners. Shareholders are the true owners of the company, and the management is and the board is there acting in fiduciary capacity by they are holding the wealth on behalf of the shareholders of the company. And at the end of the day, in simplistic term, to my mind, instead of getting into the maze of definitions, it is nothing but doing the right things at the right time and right manner. But it is easier said than done, because right things is such a word, is such a phrase which has relative connotations to so many people. What is the right thing for the management may not be the right thing for the board, or vice versa. So, but that can always be debated and deliberated in a transparent and most amicable manner, in a manner that at the end of the day, both the board and the management, they should come to the same pace, converge on the same action points, because at the end of the day, the interest of the shareholders, interest of the company as a going concern is to be protected. That is, this should be the aim of the company. So, apart from rules, regulation, and all those things, or basically the few mantras, a few things that from regulator side we expect good listed companies to abide by is that they should satisfy the spirit of law, not only tick box approach and not just the letter of the law. And they have to be as much transparent as possible to maintain high degree of disclosure levels. I mean, when in doubt, we expect the listed company to disclose, not hide. And they should make a clear distinction between personal convenience and corporate resources. I mean, misuse of corporate resources for personal benefit is one of the most important medium of abuse of power and abuse of resources, which can take different forms of corporate fraud that we see tumbling out of the cupboards of the corporates every now and then in terms of various forms of fraud, be it diversion, siphoning of funds, misappropriation, or abuse of related party transactions, layering of transactions, and so on and so forth. And the most important thing required for a good, well-governed company is they should communicate externally in a very truthful manner about how the company is being run internally. What Dr. Patnaik said, internal governance fits into external ambience, and external developments of the company also fits into the internal governance. So what is going on, in fact, the shareholder will not know. So any material event, that's what you say, all disclosure norms in LODR, anything that they think that is material enough, the shareholders should know. If they really think in commonsensical knowledge also, instead of getting into the definition, what is materiality, what is material policy, no need to go. I mean, the company really believes that my shareholders should know this, they should come forth come forward and disclose it forthwith. They should comply with all laws of the countries wherever they are operating. I mean, it should happen that they are good in India and doing something wrong in other country or vice versa. And as I said, management should behave like a trustee of the shareholders' capital and not the owner. And interest of all shareholders have to be protected at all points of time. In fact, I would say the good boards of a company are those which are pretty uncomfortable, where really a lot of dialectics happen, lot of disagreements, lot of people are really they talk freely, independently, and their mind. And at the end of the day, the board comes to a point where everybody's opinion is taken into account. We don't want, and nobody expects a company should be like either the board becomes a yes man for the management, or management becomes yes man for the board. That is also not good, because management comprises the professionals who really know the business properly, and they handle the business the way it should be to take the business into next, scale it up next level altogether. So therefore, the ideal thing that we'd expect that a company should be run in a manner at all points of time. They should ensure that the interests of the shareholders are protected. And for this very single motto of SEBI's three role that SEBI has, that to regulation and development of the market, and also protection of interests of the shareholder. This protection of shareholder becomes the kernel of all our regulations, all our circulars, all our activities. So therefore, this is on this point itself. If we find something insufficient, someone is failing, then we take action. So this is a nutshell, because so many speakers are there. I wouldn't get into, as I said, one can talk for hours together on this. But one thing, when something negative happens, financially or whatever, one thing one should, any corporate executive or corporate body or their governing board should remember that financial crisis, of course, any scam or any fraud or any misgovernance leads to financial crisis. Definitely, financial crisis may be solved by way of infusing capital or getting liquidity from some source. But what about the ethical crisis? What about the reputational risk that it leads to? That stays with the company for years together. So therefore, a well-governed company is definitely everybody's wish list. And particularly in the global scenario, where now there is increasing pace in the change in the market condition, demographic, technological and market changes, a lot of increase in the institutional participations in the shareholders. So people expect and focus on ESG, as Dr. Patnaik pointed out, particularly G, definitely we're talking about governance. What about E and S? Environment and social responsibilities have also become very, very paramount. Now, I mean the ESG theme funds, ESG rating service providers, institutional investors, they have increased their pressure on companies to remain well-behaved, conduct their affairs in very, within the law. And investor activism, you must have seen, not only institutional level, because they have given a lot of money. No, even retail investors through proxy advisors and otherwise, because there is no data asymmetry these days. The information asymmetry, which was there a decade ago, now it is not there. Everybody is coming to know what's going on through social media, and technological development has really brought us near to the company's inside story. So now more the company, it's not possible anymore for the companies to hide certain things for long. So therefore, investor activism has also increased, is good for everyone. And therefore, and in the context that over the last 8 years, we had Uday Kotak Committee in 2017, which, I mean, the corporate governance activities of SEBI started with, Kumar Mangalam Birla Committee, then Mr. Narayan Murthy Committee. I think Uday Kotak Committee brought about a lot of changes, amendments, made SEBI to ponder over a lot of issues and did. But over the last 8 years, Pawan, I would like to point out to you is that just see the increase, the incredible increase in the securities market. You will see 112% in resource mobilization, 162% increase in index, Sensex has risen, 260% increase in market cap, 311% in demat accounts, which is now around 10 crore demat account, 227% in mutual fund portfolios, about 14 portfolios we have, about 40 lakh crores of asset under management, over 355% increase over last 8 years, from 14 onwards. And this ecosystem of capital market has increased tremendously. So also all our responsibility has increased as a regulator, as investor, as the governing board of the companies. So therefore, the ecosystem has to rise to the occasion to ensure that the trust remains long. If the trust gets converted into mistrust, then of course the company at the end of the day, they have to pay a heavy price for it. Thank you. Thanks.
Thank you very much, sir. Thank you giving a crux of this. And what you have said about the personal versus corporate, I'll just tell you the one Atharved shlok, which is translated in this way. If you explain the corporate governance for the corporate world, the corporate should act like honeybee. They suck the nectar of flower without affecting the fragrance of the flower and produce honey for the well-being of the society. That is the crux of corporate governance. If somebody can follow this, then there will be no personal and the corporate thing, and everybody will protect the interest of the stakeholders. So thank you very much, sir. Thank you giving this, and no doubt we have reached to that level. Mr. Sahu has joined. He was also member of SEBI, and I have seen that how the market was bad, because I joined market in 92. I have seen the bad delivery period and the bad period when 45 days settlement period was there. So we can see this. So thank you very much, sir. Thank you. Now, I will request PK. We use in one program of where Narayan Murthy sir came, and there was a award function. And when he was speaking on the corporate governance, he was speaking about one person. I think out of 11 minutes, he spoke about 6 minutes about that person, and that person, and how he was saying that governance cannot come, because Mr. Provost Saxena has also mentioned that somebody has to teach the board. So here the role of professional comes. So I'm just requesting PK, with to whom Mr. Narayan Murthy spoke 6 minutes out of 11 minutes, so he can tell. PK, over to you.
Thank you, Pavan. Good afternoon, good evening, ladies and gentlemen. Thank you for this opportunity, Pavan, and thank you, corporate professionals. I think it's certainly very inspiring that this is the 100th webinar, and you really, I think, like another speaker kind of put it, you've utilized the crisis into a very good opportunity, and I think we all need to learn from you as to how to be innovative and be positive. So thank you for that. So the topic, of course, is excellence in corporate governance. And of course, you have requested me to speak of the role of professionals. And of course, I am a company secretary of 20 years standing. As you know, I was with Infosys and now I'm with Tata Steel. Yes, excellence in, first of all, corporate governance is, I mean, while there are umpteen number of definitions, there is lots of literature there, whether it is in the form of law, whether it is in the form of articles written by professors or practitioners, or of course, there are many, many books out there on corporate governance as to what corporate governance means, what corporate should do, what board should do, what management should do, etc., etc., etc. But I think the simplest of all definitions that I follow is corporate governance is nothing but we being first, at the very first, being honest to ourselves. I think if we as board members, if we as management, and if we as auditors, if we as professionals serving in governance roles, whether it's company secretary, whether it is the chief risk officer, whether it is the internal auditor, whether it is the chief ethics counselor, people who are occupying governance positions, if all of us can actually be honest to ourselves and be honest to our role, you obviously will have excellence in corporate governance. Of course, this is easy said than done, because at the end of the day, governance is all about applying good principles during challenging times. That's where the problem comes, because good principles always work during good times, and everybody actually applies good principles during good times. There are only very few people and few corporations who actually stand up to good principles while during challenging times, and they actually are the role models of excellence in corporate governance. Now, coming to, of course, there's lots been spoken about what board should do and what independent directors should do and what management should do. But of course, as you rightly put it, there are other players in this framework of corporate governance who contribute immensely for the corporate governance to be excellent, whether it's in corporation or, of course, it's in the government. And that's professionals like us, whether it's the company secretaries, whether it is the chartered accountants, whether it is the ethics counselors, etc., etc. And as a company secretary, we certainly play an important role because at the end of the day, I have always believed that company secretaries are the conscience keepers of the board governance. That's because you are actually very independent. You are neither representing an investor nor are you representing the management personnel. You are in a very unique position because the board has appointed you. Why has the board appointed you? The board has appointed you to help the board or assist the board in discharging their fiduciary duties to all of the stakeholders. So to that extent, you actually become, the company secretary becomes the conscience keeper, and you owe a duty to the board to make sure that the board indeed performs its duties to the fullest satisfaction of all stakeholders. And I think this is where we need to be honest to ourselves, because at the end of the day, we need to owe our loyalty to the institution and not to any particular board member and not to any particular management personnel. If our role is in conflict with our personal aspirations, I think those of us who has that kind of a problem should not be occupying these positions, because these positions clearly require the company secretaries to be independent, fair, honest, and of course, put the interest of the corporation ahead of the personal interest. What that means is it means two things. You obviously need to be very, very strong on your domain, whether it's the Companies Act, whether it is the SEBI regulations, whether it is the other economic legislations. You ought to be very, very strong, but that alone will not give you the confidence that you can be a good conscience keeper. In addition to, of course, the domain skills, domain knowledge, one needs to have strong managerial skills that we need to actually imbibe. Managerial skills of how do we kind of communicate with the board? How do we communicate with the management? How do we communicate with the regulator? How do we communicate with policymakers? How do we communicate with industry bodies? How do we communicate with investors? How do we articulate what we need to articulate very pleasantly, very calmly, in a composed manner, but at the same time being firm? That's a skill that we will need to kind of imbibe. How do we manage crisis and how do we manage dynamics between various stakeholders? Because obviously everybody's interest is not aligned. When everybody's interest is not aligned, we need to be skillful to make sure that we navigate through different stakeholders without losing sight of the interest of the organization or the institution. So obviously, how do you navigate through challenging phases of corporate life? And how do you kind of make sure that you don't damage yourself or damage the institution? So that's another skill which we obviously have to learn. And of course, more than anything else, we need to have strong ethical values. We need to lead. We need to show that by example that we mean integrity, we mean sincerity, we mean honesty. Unless these things happen, I think it would be very challenging for a company secretary to advise board with full confidence and with full firmness. And I think I've been looking at, of course, the corporations for 20 years now, because I became the company secretary way back in 2002, and now we are in 2022. And obviously, the role of the company secretary in governance particularly has changed for good, from just being an administrative role to being a ceremonial role to being a little bit of planning role. Now, I think people do recognize, I at least have come across many, many board members, many independent directors, the regulators, the managements recognizing the company secretary to be a professional who will guide them in the right direction. And that's where I find even SEBI, you know this better than me, Pawan, whenever they come out with any law, they don't just put out the law and ask companies to follow. They put out a consultation paper like they've done for Reg 30 a few days back. They hold multiple events. They give multiple opportunities to professionals like us to give inputs, and they are very open in taking constructive feedback, whether it is on Reg 30, whether it's on related party transactions, whether it's on the takeover code. I think they've been extremely proactive in taking our inputs, and that in itself means that they think that we can add value, and we actually owe a responsibility to the regulator, whether it is SEBI, whether it's MCA, or of course to the board or the management. When they repose trust, we need to stand up to that trust and make sure that we as professionals give them the comfort that yes, we mean business, we mean ethical values, and of course we are here to protect governance in a company so that the company is sustainable, the company is not damaged, and of course we always defend values and not just the facts. As long as we as professionals are able to defend values and not facts in a particular situation, I think there'll be excellence in corporate governance. With those comments, I again thank you, Pawan, for giving me this opportunity. And of course, I thank all of the other panelists who are much wiser than me and more experienced than me, and all of my friends who've been very patient listeners in this event. Thank you very much.
Thank you, PK. Thank you very much giving advice that how the conscious keeper should take a role. Thanks for your wise word, advice to the people who thinks on this. Now, we have another professional who is a chartered accountant and who is the chairman of IDBI Bank and who was with me in appellate tribunal, and he was a president of Chartered Accountant Institute. And I always admire him for his knowledge. And if you can recall, Satyam fiasco has taken place. And if you can see that today Satyam is a successful company in the shape of Mahindra Technology, the credit goes inside to Mr. Manoharan, how he has managed the governance. At that time, the governance crisis was there, so he has managed. So over to you, Manoharan sir, for your word. And we can take advantage of technology that while you are traveling, we can listen to you and we can. Over to you, sir.
Thank you, Pawanji. So nice of you. Thank you for inviting me to this 100th webinar program of corporate professionals. At the outset, I must compliment you and congratulate the corporate professionals for this endeavor to disseminate knowledge, exchange of thoughts and views across professionals on such important and current topics. Today's world, the buzzword is ESG, the environmental, social, and governance, aspects of the corporate world. Environmental is very important because of the planet, the climatic change issues, because we need to first take care of the planet in which we live. Secondly, social is equally important because people are also very important to lead a quality life, healthy life. And this point need not be overemphasized in the light of the pandemic experience we have gone through in the last 2.5 years, which has brought in the virtual world at par with the physical world. And lastly, the governance in ESG, which is, how do you make profits? How do you thrive with prosperity? How do you build well? How do you create wealth? All these should be through proper governance measures. So excellence in governance is of paramount importance to, manage all these three concerns in terms of planet, people, and profitability of an organization. And in that context, I think excellence in governance is a topic which must be dear to heart to all the professionals, be it a chartered accountant or a cost and management accountant or a company secretary. We are all collectively playing the role in ensuring that the business arms of the economy are carried out in the best possible manner and with excellence. And unless this is accomplished and achieved, just as Mahatma Gandhi said, it is not only the end that should be good and noble, it is the means through which you achieve it also should be equally good and noble. So the means of earning profits, the means of the future of the world and the future of the economies is through good governance, through excellence in governance. And Pawan, was rightly referring to the Satyam fiasco, where I had a little role to turn around the company along with the government nominated board. So we used to chair the board meetings in turns. And in the initial days when I was chairing the board meeting, and whoever chaired the board meeting will be the spokesperson for the media briefing. And at the end of the day, and when I was interacting with the journalists and briefed them, one of the journalists stood up and asked, Mr. Manogaran, you're all temporary directors nominated by the government. Satyam is a sinking ship. How is that what is that you are going to do? You are all temporary. So with all humility at my command, I responded saying, we are all temporary in this world, but we can build institutions which are permanent in this world. We can resurrect institutions which will have eternal existence with excellence. And we can imbibe and adopt governance values and principles which will last for generations together. Therefore, this topic assumes great significance because human beings are mortals, but institutions are immortal, can be eternal. And what can make them eternal? Only excellence in governance. With excellence in governance, institutions can succeed and continue generation after generation, centuries after centuries. And therefore, this topic assumes significance. With my limited experience or learnings, let me share a few quick ground rules for ensuring excellence in governance. First, I think is it is about the culture and ethics of the human resources, key management personnel, promoters, executive directors, non-executive independent directors, the professionals like company secretaries, chartered accountants who are part of the key managerial personnel and who render services, internal auditors, statutory auditors, all play various roles they are critical limbs in the governance. They are pillars supporting excellence in governance. So for them, that cultural values should be inbuilt and imbibed. But morality cannot be legislated, but conduct can be regulated. That's why we have code of conduct. Even for independent directors, we have code of conduct in Schedule 4 of the Companies Act. Even for professionals, we have code of conduct and ethics governed by the respective regulatory professional bodies. And secondly, see, good people don't need laws to tell them what to do, what not to do. But for bad people, whatever way you fine-tune the law, amend the law, they'll find ways and means to circumvent the law. And therefore, there has to be punitive measures and stringent punishments. That's why we have those segment of the legislation also. And third thing is, we should, as professionals, inspire the corporate managements to go after intangibles than tangibles. Intangibles like, excellence in governance, goodwill, quality, human resource empowerment, brand building, reputation, all these things are intangibles. If any management can focus on building intangibles, preserving, nurturing intangibles, the tangibles will automatically follow. The tangibles in terms of wealth creation, fixed assets, earnings per share, profitability, all these are all tangible financial things that will follow intangibles. But if you focus on tangibles of, how much is the revenue, how much is the bottom line, earnings per share, and try to compromise values to achieve it by hook or crook, then there will be no good governance, and therefore the institutions will perish and the fall would be mightier. And similarly, in terms of the government also, professionals should, in order to enhance excellence in governance, we should not merely be spectators and implementers. We should also contribute to the policy making. so that the government, the regulators who are in the realms of governing mechanism are able to bring out right policies. And if any policies are beyond comprehension or causing genuine hardship, then we must represent to tone down the vigor of the legislation so that the excellence of governance does not suffer on account of excessive legislation or exceptional legislation. For example, Companies Act, if you recall, 2013, brought in so many criminal punitive measures which can impair even the genuine players in the corporate world. And therefore, representations were made, and so many of them got omitted or removed, and some of the criminal offenses have been converted into civil liabilities, toning down the rigor of those provisions. So this is a journey where all of us as professionals participate, facilitate policy formulation, effective implementation, and creating an environment where excellence in governance can be enhanced, sustained, and can lead to a world which is a better place to carry on business and sustainability and quality of living. In fact, India, we should be proud, is emerging as a very strong economy, because the ease of doing business was, the ranking was 142 6-7 years ago. Then we moved on to 130, then to 100, then to 77. Now we are at 63rd rank. And very soon, I am confident we'll come in the top 50 nations and then scale up further. Even in GDP size, in 2015, we overtook Canada to become the 9th largest economy. In 2018, we overtook Brazil and Italy to become the 7th largest. In 2019, we overtook France to become the 6th largest. And last quarter, we overtook UK to become the 5th largest economy. And in 2027, we are, scheduled to overtake Germany, and 2029, Japan, to become the 3rd largest to compete with the US and China. And in this context, I think, and India is not just known as India in the external world. It is incredible India because it is the most attractive global destination for investments. And it is the best place for producing talent and human resources. And from that perspective, if we can imbibe excellence in governance, I think there is no way India can be stopped from emerging as a developed economy and a very powerful economy, the fastest growing economy. So with these observations, thank you so much, Pavanji. He has been, I enjoyed working with him in the appellate board of the disciplinary mechanism, and cherished always my association with him. I wish corporate professionals continued excellence in conducting such webinar programs and disseminate knowledge and information to its members. Thank you so much for the opportunity given.
Thank you very much. Thank you, Manoran sir. You have given the good message that you increase your tangible, intangible, you increase your intangible, tangible will automatically increase. That's the best message which you are given. And I think that's a message to all the people. Thank you very much, sir. Now, we have seen that corporate world is there, but the regulator is also there. Now, in the regulatory aspects of taxation, what is the view of from the tax aspects? I'll request Amit Mohan Govil, who is a Director General in Central Economic Intelligence Bureau, Department of Review. What is his view, Amit?
Thank you very much, Pawan. I will start on a personal note. Pawan is a very dear friend, as Dr. Prabodh Saxena and Dr. Amar Patnaik, and in fact, my brother also, Manish, is sitting over here. We are old jubilants and we go back a long way. And as Prabodh Saxena Saab said, that Pawan's is an incredible journey. What Dr. Manohan said that about Incredible India, we talk about incredible journey done by Pawan in terms of bringing together such a huge concept of sharing of knowledge through these webinars. I congratulate him on reaching this huge milestone of 100th webinar. and my personal congratulations to him. Today I will be talking a little bit from the regulatory side. In terms of my previous speakers, Dr. Amar Patnaik spoke about corporate social responsibility. Prabodh Saxena Saab spoke about devoting more time towards corporate governance. Mr. PK, he brought about the perspective from a professional, and Dr. Manoharan and Mr. S.K. Mohanty talked about excellence in corporate governance, which will lead to better corporate outcomes. I, in that context, talk about the regulatory aspect, and I'll be touching with two aspects, basically on transparency and beneficial ownership. Now, governance of a state is not a recent concept. Since the days of Kautilya, in Arthashastra, the rules of conduct of a king towards the people itself were prescribed and executed accordingly. Corporate governance is a combination of rules, processes, and laws by which businesses operate, are regulated and controlled. The terms encompass the internal and external factors that affect the interest of the company's stakeholders, customers, suppliers, government regulators, and management. Today's the corporates contribute significantly towards government revenues in the form of both direct and indirect taxes, and bring in private capital investment, create assets, create wealth for stakeholders, create employment and job, and in that sense contribute towards nation building. The share of corporate taxes in the revenue basket of the government is ever increasing and has already touched nearly 5 lakh crores till October 2022, which are the highest ever figures. So this year, the corporates in terms of revenue contribution have been doing exceptionally well. And that corroborates what Dr. Manoharan was saying, that we are leading towards India becoming a great global leader in terms of corporate excellence. And that is reflected in terms of wealth creation by the corporates. Now, good corporate governance helps to build an environment of trust, transparency, and accountability necessary for fostering long-term investment, financial stability, thereby supporting stronger growth and more inclusive societies. Good corporate governance ensures a company's integrity, overall direction, and risk management, whereas bad corporate governance can lead to a host of negative consequences, such as failure to reach company's goal, loss of support from stakeholders, and financial losses. Poor corporate governance may lead to various corporate frauds, such as misappropriation of cash by fudging accounts, raising excess term loans from banks and financial institutions. We come across such instances. That's why I'm relating these. Raising excess term loans from banks and financial institutions and inflating the project cost by over-invoicing the plant and machinery components and diverting inflated amount for non-business use. Raising fictitious bills of sale and purchase by circular trading entities, falsification of annual accounts to show inflated turnover as well as profits, and declaring good working results to stakeholders. Now, principles of corporate governance include fair and equitable treatment, accountability, oversight, and management, and transparency. Now, I would like to dwell upon transparency part in detail, keeping in view some Financial Action Task Force, FATF, principles on anti-money laundering and control of terror financing. The Honorable Prime Minister is also addressing a global conference on no money for terror earlier today. And in that context, transparency in corporate governance assumes significance. Now, focus on transparency and information disclosure strategies are important part of corporate governance. The word transparency can be used to define high-quality financial statements. Financial statements of some of the companies are designed to hide rather than reveal actual information. Companies whose financials are difficult to understand and have a complex business structure are riskier and less valuable investments. When financial statements are not transparent, investors can never be sure about the company's real fundamentals and true risk. A lack of transparency may also obscure the company's debt levels. If a company hides its debts, investors cannot estimate the exposure to bankruptcy risk. High-profile cases of financial impropriety showed everyone that managers may employ fuzzy financials and complex business structures to hide unpleasant news. At times, complexity of business lines also adds to challenges. Some companies are just simply more complex than the others. Many operate in multiple businesses that have little in common. Further, increasing use of derivatives, forward sales of balance sheet financing, complex contractual arrangements can befuddle investors. If the investor neither believes nor understands a company's financial statement, its performance and fundamental values remain irrelevant or distorted. Every company has to practice corporate transparency in some way or the other, whether it is to meet government regulations or to update its shareholders. Modern businesses disclose their actions to someone outside their organizations to some degree, but some companies, they have raised their transparency to another level, sharing detailed information and data on their corporations beyond what is legally required and making it available to all. Therefore, corporate transparency forces to face reality, sparks corporate action, is required for consumer trust, can lead to cooperation across an industry. Number of cases that we get reported in the Bureau relating to bank frauds and siphoning of funds, bank loans, it is noted that financials are manipulated, inflated, and incorrect. In numerous cases, falsification of financial results on account of active collusion of auditors of the company officials. The siphoned funds are further layered to launder money with an object to obscure its origin through web of complex and opaque legal entities and arrangements. One of the effective ways to enhance corporate transparency is to ensure availability of beneficial ownership information in respect of legal entities and legal arrangements. Lack of information of beneficial ownership of legal arrangements and legal entities poses major challenges for effective financial action task force standards with a view to check large-scale money laundering through these instruments. FATF has laid emphasis on availability of beneficial ownership information by member countries in a timely and structured manner. So the things that I am talking about are transparency, making available beneficial ownership structures in a public domain, and leading to better corporate governance going forward. So these are some of the messages that I wanted to convey, and I wish corporate professionals the very best. And I thank you very much, Pawan, for inviting me for this. Thank you very much.
Thank you very much, Amit. Thank you. You have, because we have discussed so many times why the government and regulator brings law. This is the reason that if we do the negative thing and bad thing, that's why. So law is not for good people, law is for the bad people. And because of the bad people, the regulator brings law. Now, so thank you, Amit. Thank you very much. Now, Manish. Manish is looking after CCI, the Competition Commission. And there is another aspect from the competition aspect on the governance. So what is your view, Manish?
So thank you, Pawan sir. Thank you very much for inviting me over here for this seminar. And I must say it is indeed my privilege today to be here speaking to all the distinguished people, my worthy seniors from Jubilee Hall, and my brother Amit, and all of you who have been there, and the fellow speakers who are going to follow me in this discussion today. Mr. Sahu is going to be here. He was member at CCI, and I'm sure he will also be contributing a lot on this subject. So I should also take this opportunity to congratulate corporate professionals for regularly organizing these free webinars every week on diverse topics which are relevant for corporates and professionals. And I'm sure everybody must have benefited immensely from these participating in these seminars. And today is a good milestone, the 100th seminar. And the topic is excellence in corporate governance, a very relevant topic. and I will be touching on the point of view of corporate governance and competition policy. So taking a cue from what Mr. Amar Patnaik had said, and he distinguished between internal and external duties of a management. So corporate governance law addresses the conduct of the management of companies, and their primary duty is towards their shareholders. That is, the management's role is to ensure that there are greater returns to its shareholders. And in the recent modern context, as the speaker before me had said, this has expanded to a wider shareholders. And these are the responsibilities on environment, social responsibilities of the corporates. Competition law, on the other hand, governs the interaction between corporations and other actors in the marketplace, and prohibits and penalizes anti-competitive agreements, unilateral conduct, or abuse of dominance that may unreasonably injure competition in the market. The Act also regulates mergers and acquisitions that substantially lessen competition. So generally, these may be seen as two separate or different aspects of the law. As one, that is the corporate governance that governs the internal operations of a business entity, while the other, that is competition, governs the external relations of these entities with the other players in the economy. However, there is a need to go beyond the conventional disconnect and take a more unified approach towards the two key areas of business law in order to promote the interests of both the shareholders and the consumers. So let's first take what are these competition processes and why we need. The competitive processes strengthens business firms and their sustainability. Effective competition pressures firms to offer better quality and greater choice of the products and services at lower prices to consumer. It also pressures firms to lower costs, adopt more modern technologies and efficient productions and organizational methods, and engage in R&D and innovation. The Act, which was there to promote competition in the market, it was enacted in 2002. It came into effect in 2009 to prohibit anti-competitive practices, including cartels, and it regulates potentially anti-competitive mergers and agreements that have AEC, which is appreciable adverse effect on competition. And the example of these AEC is anti-competitive agreements are fixing of prices, limiting or controlling production or supply, technical development, refusal to deal, to name a few. So the violation of Act can invite penalty, and therefore it is important for the companies should have a competition compliance program to ensure that they do not fall foul with the provision of the Act. Apart from this legal sanction, any adverse order of the Commission can also lead to reputational harm. So therefore, the practice of following good competition compliance culture should be encouraged and inculcated at the grassroots of the organization so that competition compliance responsibility cascades down to the junior management. For this, the CCI has come out with a competition compliance manual, and there are certain do's and don'ts in that manual which most of the corporate agencies can follow. This competition manual, it is available also on our website. Now, just I'll be touching upon a few things which are prohibited and what we regulate under the competition law. And the first one, which is more important, I'll just briefly touch on all these issues. The first one which we regulate is the cartels. And cartels, as you know, they are formed, they limit output, they can create scarcity of goods and services in the market, they can increase the price beyond competitive level. And as such, this leads to profit reading and not just making a significant profit, which is justified under the law. So what happens is when these cartelized environment is prevalent, the company's goods, this can affect the company's portfolio adversely, and they can become incompetitive in the world market. For example, let's say if the inputs in the downstream industry are cartelized, then this will lead to the higher cost, which can ultimately be borne by the consumers. So besides cartelization in transportation, etc., etc., can lead to delay in business. Therefore, what is required by the board is to ensure that in the best interest of the shareholders, they need to be alert to such cartelization in the market. And also, as far as the procurement policies are concerned, even in big, large corporates, we see that many of the companies are suffering from bid rigging in their procurement and high input prices. So they can use some good practices, procurement policies, so that they can have economic pricing of their products. And from competition point of view, cartelization can have an impact on the entire economy. And the issues that raise input costs of a cartelized economy would affect the entire supply chain. This would ultimately lead to end consumers having to pay higher prices. And if the cost of final product increases, the final product is not competitive even in the world market. The other important thing which has come into light is the vertical restraint, and the concept of vertical restraint involves upstream players either denying access or refusing to deal with the downstream player. These practices are not per se illegal, but rather are governed by rule of reason. So we need to see these anti-competitive behaviors. In this slide, we have to see the anti-competitive behaviors of the intermediaries. So we see the two trends in the modern side. One is because of the large platforms that have become essential to reach the customers in the market. So whether you want to sell a book, or you are a news agency which is wanting to capture the attention of the news readers, anything, you require digital platforms. Secondly, what is happening is there is a shift of infrastructure facilities such as ports and airports and marketplaces from public space to the private space. So whether it is the platforms or infrastructure facilities, all these are natural monopolies. And by virtue of this monopoly, they have the power to determine the access of enterprise engaged in those relevant markets. On the basis of rules which are formulated by them. So I think there is some disturbance.
Yeah, you carry on.
Access to these platforms and these basic infrastructure, or having a level playing field or competition in this market, is therefore very important. Therefore, we have seen that there is a need for a clear ex ante rules of terms of engagement between the economic players, that is like the suppliers and service providers and intermediaries. So in 2019, CCI had initiated a study on e-commerce sector and urged the market players to self-regulate. Now, recently, the Commission, through its decisions, has tried to set such rules of engagement in the digital space through its decisions, and you must have all read about these judgments. And the third is about the abuse of dominance and experience. We have seen that large dominant firms which have entrenched interest in the market, and because of the size and dominance and financial clout, they can call shots regarding the pricing and quality of output. So dominance per se is not prohibited, but abuse of dominance is prohibited. So exclusionary practices like predatory pricing, denying access, etc., exploitative practices should not be entered by corporates. So bigger players have that additional responsibility towards the clients that go beyond the contractual obligation. It is the responsibility of trust. Finally, on the merger side, they also regulate mergers and acquisitions. The competition authorities also regulate mergers and acquisition. Here we have tried to set in a very professional merger regime where we clear the mergers in a time-bound manner. We have initiated good concepts like the green channel, where automatic approval of mergers is given. And we have a very robust system of pre-filing consultations. So, and started having guidance notes. We have revised forms for filings, and we have recently taken out frequently asked questions to clear the doubts of the industry. So on whole, in all these aspects, the Commission is trying to facilitate the corporates, and it is also in the interest of the corporates to follow a good competition compliance regime. So just to conclude, I would like to emphasize that the responsibility of protecting and promoting competition does not only rest with the competition authorities. Responsibility also lies with the business also. And litigation in the competition can create both loss for the government and for the business also. So important thing which I want to give a message at this point is that companies should have a strong compliance mechanism for competition issues. They should be vigilant against being a victim to anti-competitive practices, especially by the big players, and set out rules of the game, especially in the space of intermediate, their interaction with the intermediate platforms, etc. So with these words, I would once again like to thank Mr. Pavan Kumar Vijay, our esteemed senior, for inviting me. And I'm sure with whatever experience I have, I've been able to contribute a bit in this discussion. And I'm sure more experienced people who are going, who would be speaking and addressing this webinar, they will be coming and sharing their views. With this, I would like to thank everyone, and I would like to wish corporate professionals all the very best, and hope you have more and more of such seminars and benefit in this debate. Thank you so much.
Thank you very much. Thank you, Manish, for giving the prospects of CCI. Now I welcome Raju Vistaji, Member of Parliament. He has just landed. So before Rajuji settled down, I'll request Mr. Sahu, who was a member of SEBI and chairman of IBVI, his prospect on the governance aspects. Excellent corporate governance, Sahu sir. Because time is short, so I will request everybody to just confine. Yeah, please, Sahu sir.
Yeah. Thank you, Mr. Vijay. Thanks to the corporate professional for giving me this opportunity. And the subject is very appropriate, that excellence in corporate governance. So I often ask myself, what is actually the corporate governance is? And I've asked this question to many people, and I get answer that whatever enables a company to pursue its objectives. And what is the objective of the company? The objective is to generate a value ethically and distribute the value equitably, that is, carry on business in accordance with the law. But most important is that it must do it forever. Company being an artificial person having perpetual life, so it must continue to generate value, distribute value forever, and it must not have any premature death. What Mr. Manoharan was referring to, I am taking a cue from that a company must live forever. It must not be allowed to have, or no way the life must be curtailed, because company is very important for all of us. It actually gives us a house, feeds us, clothes us, employs us, and these companies have often organizational value over and above their liquidation values. So if you close a company, you are actually destroying the hope of the people, the organizational capital, and it takes years of efforts to build a company which can replace an existing one. So therefore, to me, the corporate governance is, let us first ensure that the company lives, and there should be minimum threat to the life of the company. Only if it lives, it can generate value for us. So we can proceed one step further to generate value, or still another step further to distribute value, only if we can ensure that the company survives. But the data is something dangerous. What we get the data that the companies nowadays having, their life is actually decreasing. Say about a century ago, the life of a company was about 100 years, 90 years, and 100 years. And when human beings lived, about 30 years. But today it has just reversed. The companies are living less than 25 years. And we have in history a company known as Congo Gumi Company that lived 1429 years. But today we have such maybe 5-10 such companies which are 1,000-year-old, and all of them are in Japan. But the data show that of the, say, let's say the average life of S&P 500 companies, that has reduced to 15 to 18 years now. And all the big companies you find today, all of them are young companies, 10-year, 15-year-old, maybe Microsoft is the eldest of them. So that means a company which was having indefinite life now lives is shorter than human. And this really begs the question, whose life or whose company is it anyway? So we have to now come back to the basic roots that we created companies because because we humans are not mortals. We wanted to create some immortal structure which would live, carry on our legacy forever. And that is getting frustrated today. And that is my concern, that the corporate governance has to address first that company must live and company must not have. Yes, there can be situations when it has really become economically unviable, it should be closed down, but it must not have any premature death. And to me, the life of a company has three enemies I see. The first is the enemy within the company, because a company being an amalgam of stakeholders, each stakeholder has a unique stake, unique objective function, distinct set of rights, interest, and engagement. Big companies, the shareholders today buy shares and hold it for a few seconds. And that is the engagement, that is the stake many of the stakeholders have. And those who have also a little longer stake, often they have conflicting objectives. One pursues one objective which is opposite of other stakeholders, or at times they pursue an objective which conflicts the objective of the company. And the shareholders who are in management, because they know they have a limited liability, they take extraordinary risks, putting the company to unlimited liability. See the example of Satyam, again Mr. Manoharan was referring to example of Bhopal gas tragedy. All these unlimited liabilities are thrust upon the company as well as the society, because a few shareholders, being in management or promoters, they pursue or they carry unusual risks. So one is that persistent, uneven sharing of wealth among the stakeholders and not having enough engagement, or having somebody pursuing one's own objectives. These are coming. First thing is that, and also this is contributing to inefficiency sometimes. This is coming on the life of the company, and for this we have come up across developed something like independent directors, key managerial personnel, related party regulations, minority interest protection, the financial and secretarial audit. All these things have been done, which are fancifully called corporate governance, and these are supposed to subordinate and synchronize the interest of stakeholders with that of the company, and then subordinate the interest of the company with that of the society. But quite often we see these are not followed in letter and spirit, rather these are breached most often. So this is the one set of enemy we have to deal with. The second enemy is the unfair competition, unfair battles at the marketplace. Like a company which has a financial muscle, which can sell a product below cost. My predecessor was talking about the competition issues. If a company can sell a product below cost for a sustained time because it has financial muscle, the one who does not have a similar financial muscle cannot sell the product and therefore cannot do the business. So this is called predatory pricing. Law prohibits predatory pricing, and there are several other examples. Someone pays a tax, another person does not pay tax. Somebody manipulates the security market, raises money at a lower cost, somebody is not able to do. So these are the questions of rule of law, and it is the duty of the state or competition authority or state agencies to ensure to protect these companies from unfair battles at marketplace. The third set of enemy, which is actually the most fatal, that is the competition and innovation. This we consider fatal because it is the state policy to stimulate competition and innovation and eliminate anti-competitive conduct at marketplace, because we want growth, and growth requires competition and innovation. And as you know, a company loses life when it fails to compete with its peers in the industry for reasons such as poor organization, inefficient management. Sometimes it could be malfeasance also. And it also loses life when its business becomes unviable for reasons such as innovation. In fact, the creative destruction often destroys more companies than it creates. And what can help the companies in these cases is the strategies of resilience, adaptation, research, development, risk management, sustainable business model, business leaders, visionary leadership, but there is no code for this, and this is something within the something this has to come from the company. As of course the law provides for layers of security, but we have to be watchful of these three enemies, and it is the shareholders, promoters, and current management. They are responsible to rescue the company whenever company gets into any kind of stress much before, and if they do not do that, if company gets into distress, the law provides that something insolvency and bankruptcy code, whereby a set of creditors come in with extraordinary powers. The powers are that if possible, they will rescue the company, and if not possible, they will liquidate the company. And we see that large number of companies are getting liquidated because they have reached a stage when committee of creditors is no more in a position to rescue them. They have extraordinary powers, as I mentioned, the powers like that they can give or take haircut of any extent to any stakeholder. They can get the best resolution plan from anywhere in the market, and the resolution plan can provide for anything and everything that rescues the company. Yet many companies are not being rescued, or there is no market, no one is willing to rescue that company. That means it has gone beyond a point. It has gone to what we call not just financial stress, it is having economic stress beyond repair. So if you allow the companies to reach such a stage, even the creditors and even the insolvency bankruptcy code cannot rescue the company. These will be liquidated. So therefore, my request, and I just began that the entire corporate governance is, first thing is, please ensure that the company continues to live. And these are the three enemies. We must have institutional mechanism to protect the companies from premature death. This is all I wanted to talk. Thank you, Mr. Vijay and corporate professional, for giving me this opportunity.
Thank you very much, sir. Your wide experience and knowledge on various things you have rightly pointed out. Thank you very much, sir. Now, one of the youngest parliamentarian and who is working as a professional industrialist, I want to take his view. Rajuji, we just want to listen from your side. What is your take on the excellence? Because you are now the legislator also, you are in the industry also. What is your view?
या पवन जी नमस्ते, मेरी आवाज आ रही है?
आ रही।
So, सबसे पहले तो मैं हमारे सभी जितने भी स्पीकर हैं, विशेष करके हमारे ऑनरेबल मेंबर ऑफ पार्लियामेंट राज्यसभा, वो भी आपके बीच जुड़े, और बाकी बहुत सारे जो हाईली कॉम्पिटेंट है और जो इस विषय को समझते हैं, उन्होंने सारी बात आपके समक्ष रखी है, और मैं उसको बहुत ज्यादा रिपीटेशन पे नहीं जाऊंगा। मैं आपको और आपकी टीम को और कॉर्पोरेट प्रोफेशनल को बधाई देना चाहूंगा कि इस तरह के आपने करीब 100 वेबिनार अब तक किए हैं, सेंचुरी हुई है, और ऐसा आज के जमाने में बहुत कम होता है कि जो ज्ञान मेरे पास है और मैं फ्री में दूसरे को बांटूं। तो अपने आप में ये एक बड़ा कीर्तिमान आपकी टीम ने और आपने स्थापित किया है। जहां तक कॉर्पोरेट गवर्नेंस की बात आती है, बहुत वाइटल बड़ा विषय बन जाता है। इसमें अगर कोई आदमी अपनी बात रखना चाहे तो सारे विषय इसके अंदर में समा जाते हैं, टेक्नोलॉजी से लेकर के फाइनेंस अकाउंटिंग से लेकर के कंपटीशन से लेकर के, अभी सब बात हम लोग सुन ही रहे थे। सो रोजमर्रा जीवन में मैं ये देखता हूँ, क्योंकि मुझे भी इस लाइन में काफी साल हो गए, बहुत छोटी उम्र से ही। मुझे जो लगता है, जो आज भी जो हिंदुस्तान में सबसे बड़ी कमी मुझे दिखती है, हालांकि मैं ये कह सकता हूँ कि आज मोदी जी के नेतृत्व में बहुत कल्चरली देश को और हमारी मानसिकता को भी बदलने का काम हो रहा है। मुझे नहीं लगता कितने लोग मेरे से एग्री करेंगे, नहीं करेंगे, वो विषय अलग है, बट जब तक हमारे अंदर में एक डिसिप्लिन, हमारे अंदर में कल्चर, हमारे अंदर में संस्कार नहीं आएगा, और ये जो जिस कल्चर में आज भी हम रहते हैं, मैं एक एग्जांपल आपको बताऊं, कोई भी ऑपरेशन हो, किसी भी तरह का बिजनेस हो, आप देखेंगे हमारे यहाँ मान लीजिए आप फैक्ट्री या प्लांट में जाएंगे, तो प्लांट में जो प्रोडक्शन का आदमी अगर 50 आदमी होंगे, तो उसके पीछे आप देखोगे 25 आदमी जो है क्वालिटी कंट्रोल वाले रहते हैं, और ये सब जगह होता है, ये चाहे कोई स्टील से जुड़ा हुआ हो, चाहे अन्य कोई भी जो है ऑपरेशन हो। वो है इसीलिए क्योंकि हमें ये विश्वास नहीं है कि जो ऑपरेशन वाला है वो 100% अपना काम पक्का करेगा, इसीलिए हमको उसके पीछे जो है 25 सुपरवाइजर लगाने पड़ते हैं। तो जिस कल्चर में हम लोग आज जी रहे हैं, या जिस कल्चर का हमको आदी हो गया है, मुझे लगता है उस कल्चर से हमको निकलने की बहुत आवश्यकता है। उसमें हमारी एफिशिएंसी भी बढ़ेगी, और हमारी डिपेंडेंसी भी कम होगी। और क्योंकि ये सब जो गवर्नेंस की जब भी बात करते हैं, अल्टीमेटली क्या है, अल्टीमेट ये है कि हम डिस्क्लोजर ठीक करें, हमारी अकाउंटिंग ठीक हो, ट्रांसपेरेंसी हो, और कुल मिला के मतलब जिस भी बिजनेस में हमें उसमें वैल्यू क्रिएशन हो, और एट द एंड इन्वेस्टर को उसका एडवांटेज मिले। क्योंकि बेचारा एक इन्वेस्टर घर में बैठ के या अपने दफ्तर में बैठ करके आंख बंद करके किसी को मतलब कंपनी का जो है बैलेंस शीट देख करके या उसके रेशियो देख करके वो अपना पूरा जीवन की पूंजी लगा देता है। और ऐसा बहुत बार हुआ है कि बहुत बड़ी बड़ी कंपनियां, मैं कोई पार्टिकुलर कंपनी का तो नाम नहीं लेना चाहूंगा, हम सब जानते हैं किस तरह से जो है लाखों करोड़ों रुपए जो है मतलब इन्वेस्टर्स से डूबे हैं। सो ये एक कल्चरली हमको अपने आप को बदलना होगा। और मुझे लगता है आज सरकार जिस तरह से कानून को कम करके लोग ही जो है अपने आप जिम्मेदार बने, जिस दिशा में काम चल रहा है, समय जरूर लगेगा क्योंकि 135 करोड़ की आबादी का देश है, और हम कुछ भी करते हैं तो बाकी देश की तुलना में हमको ज्यादा समय लगता है। तो उस दिशा में काम चल रहा है। मुझे लगता है कि ये एक बड़ा मतलब हमारे लिए एक ये प्रयास होगा, अगर ऐसा हो सके तो, कि हम खुद ही इतने जिम्मेदार बने कि दूसरों को हमारी बैलेंस शीट और दूसरों को हमारी जो है सुपरविजन करने की आवश्यकता ना पड़े। 2-3 चीजें आमतौर पे मैं देखता हूँ, मतलब कंपनियों में क्या है, एक तो ये बेसिकली 3 चीज होती है। कंपनी में एक बोर्ड होता है, दूसरा कंपनी में एक प्रमोटर होता है, तीसरा कंपनी में मैनेजमेंट होता है। बट बहुत सारी कंपनियों में ये है, अच्छी बात है, लेकिन आज भी ज्यादातर कंपनियों में बोर्ड का काम बोर्ड को नहीं पता, प्रमोटर का काम प्रमोटर को नहीं पता, और मैनेजमेंट मैं उसको ज्यादा दोष नहीं दूंगा, वो जनरली अपना काम उसको ऑपरेशन कर देखना होता है, वो देखता है। सो ये जब तीन आपस में जो है तीनों जगह सिर्फ प्रमोटर का चलता है, या सिर्फ बोर्ड का चलता है, या सिर्फ मैनेजमेंट का चलता है, ये एक बहुत बड़ी समस्या है। मुझे लगता है तीनों के काम अलग अलग होने चाहिए, और तीनों को अपनी जिम्मेदारी का भाव होना चाहिए, और तीनों इंडिपेंडेंटली काम करने चाहिए, और लेकिन साथ में वो कॉम्पिटेंट भी होनी चाहिए। मान लीजिए बोर्ड में इंडिपेंडेंट डायरेक्टर हैं, लेकिन वो कॉम्पिटेंट नहीं है, वो सिर्फ इसलिए है क्योंकि उनको फीस मिल जाती है, या उस लाइन को नहीं समझते, या जो बेसिक चीजों को नहीं समझते। ये भी मैं देखता हूँ बहुत सारी कंपनियों में बहुत दिक्कत होती है। और ये बोर्ड अच्छा नहीं होने के कारण या मैनेजमेंट स्ट्रॉन्ग नहीं होने के कारण कई बार प्रोमोटर भी उसका अनड्यू एडवांटेज लेता है। हालांकि प्रोमोटर ये सोचता है कि उसने बहुत बड़ा काम किया है, लेकिन लॉन्ग रन में उसको ये पछतावा होता है। और इन जनरली आजकल क्या है, एक ये जो वैल्यू क्रिएशन के चक्कर में बहुत बड़ी बड़ी चीज मार्केट में आपको ऐसी दिखेंगी, वैल्यू सिर्फ पेपर में है लेकिन ऑपरेशन कुछ है ही नहीं। सो ये सब चीजें जो है बहुत आम तौर पे आपको देखने को मिलेगी। और जितना कम से कम जो है प्रमोटर का मुझे लगता है इंटरफेरेंस उतना ही होना चाहिए जितना एक इन्वेस्टर का होता है या एक शेयर होल्डर का होता है। सो ये सब चीजें है। सो एट द एंड मेरा यही कहना है कि जब तक हम मिल करके हर व्यक्ति अपनी जिम्मेदारी से अपना काम करे, और देश में एक वातावरण ऐसा लाए कि हर व्यक्ति यहाँ जिम्मेदारी से काम कर सके। और जहां तक आपने लॉ मेकर की बात की, इस सरकार का भी ये मानना है कि भविष्य में जिस तरह का वातावरण मोदी जी चाहते हैं, अगर वो हो तो मुझे लगता है देश के बहुत सारे जो अभी पैसा जो है सुपरविजन में लग जाता है या कमांड कंट्रोल में लग जाता है, मुझे लगता है वो कई लाख करोड़ रुपया जो है हम देश के गरीब जनताओं के काम में ला सकते हैं, ऐसा मुझे लगता है। मैं ज्यादा समय नहीं लूंगा और आप कई लोगों की बात मैंने सुनी और मैं अंत में एक बार फिर पवन जी और आपकी टीम को, कॉर्पोरेट प्रोफेशनल को बहुत बधाई देना चाहूंगा। और मैं थोड़ी देर से ज्वाइन किया क्योंकि एक रोड ट्रांसपोर्ट मिनिस्ट्री का एक सरकारी कार्यक्रम था मेरी कॉन्स्टिट्यूएंसी में, तो मैं लेट हुआ, तो मैं उसके लिए क्षमा भी चाहता हूँ। आप सबका बहुत बहुत धन्यवाद। थैंक यू।
Thank you very much, Raju ji. Thank you. You have rightly pointed out board, promoter, management. All three are different. They must act differently, but with cohesive things, and that's why the growth of the company can take place. Thank you very much. Now, now come to the person. When we have completed our 100 webinar, I have mentioned that there are so many people who has supported, who has helped us, and who has really taken the best from us. That is Mr. Sundaresan, and in his guidance, we have organized various programs on PIT, gold stock exchange, various things. Over to you, sir, for your view on this particular excellence in corporate governance.
Good evening, Mr. Pawan, his team, and the corporate professionals and other people who are speakers as well as the participants in this seminar. It's very heartening to note that corporate professionals has achieved such a milestone of reaching 100 webinars in a short span of 2 years. It is no mean a small achievement. Definitely, it deserves very, very good commendation and appreciation, because this webinar has helped and served a lot of people to enrich their knowledge who have attended as well as those who have come and spoken here. I am the beneficiary in both ways. Whenever you have called me to speak, I have to prepare, so that helps me to unlearn, learn and relearn. Similarly, on various topics which are, I didn't have an opportunity to study or something, and you have conducted, I was a participant. And some topics which are, nothing to do with corporate or, like how to prepare a bill, what type of family settlement should be done. These type of topics were so innovative. And just the way you have covered them and your team has put so much of efforts, really shows that the efforts putting by all of you in making this forum a very useful one for many of us. Having said that, coming to today's topic on governance. Now you have wanted excellence in governance, but what I find is that I do not know how many more years for us to reach and profits that word of excellence in governance. Because in the last 10-15 years, when I am associated with this subject of governance, I normally, of course, it is a borrowed terminology. I use 3 types of compliance, and like apparent compliance, adequate compliance, and absolute compliance. And when you are reaching the stage of absolute compliance, I can say that your governance standards are somewhat in a respectable or a level at which you can claim some sort of a credit. But unfortunately, what I find in the last few years is, and where SEBI has been coming out with the second orders on this, financial impropriety and other things, I find that instead of 3 types of compliance, it is reaching to the 4th level, which I am going to call it as absurd compliance. And when Mr. Sagu pointed out that the life expectancy of the human being is increasing, whereas the life expectancy of the corporate corporates are decreasing, the main reason is that the human expectancy is reduced because of certain toxic practices adopted by a human being. Similarly, why this corporate the life expectancy of a corporate comes down? because of certain toxic practices adopted by the company during its lifetime. And higher the toxic level, lower the lifespan. And that's what we all know. What applies to human being applies to corporates. Because ultimately the corporates are created by human beings. They will not come from some other planet. But howsoever we try, my view is that writing more and more rules, writing more and more more and more prescriptions is not going to help to completely remove this absurd compliance and then move to at least adequate compliance, if not absolute compliance. Now, for that, it is the cultural change which needs to happen. Definitely, one of the developments is that the way digital, the payment or the digitization which this, these people of this country has been adopting over the last 3-4 years is definitely one of the very good way of moving towards that stage of improving the governance. Similar type of efforts have to be put in other areas, not only in the financial field, but the ethical standards have to be improved, and at every stage, from the childhood, this has to be imbibed, and one needs to constantly and consciously take efforts to follow certain ethical standards. You cannot come by somebody telling. I mean, howsoever you teach our children, certain things have to be learned by themselves. You cannot go on putting them into the head and expect that they will follow. Same way, the same principles applies to the corporates, the management, whether you call him as a promoter, whether he is in management or not, whether the consultants, advisors, in whichever form a corporate entity engages with the people, all of them have to have a collective effort in developing certain ethical standards and scrupulously following that. The main problem which I find is that people start with that type of noble intentions, but when they travel in their path of, when they pursue those, principles or practices, somehow, due to certain competitive pressures or peer pressure, whatever you call, they start deviating. And the biggest problem is when you accept the first deviation. Because when the first deviation happens, we console ourselves. It is only for a very short period of time. It may not happen again. It will stand corrected in due course of time. But for a particular quarter, if you adopt a particular toxic method to show a quarter-on-quarter result, I think recently, I read in that preface to the book of, Satyam Scam. That is what is written that, for one quarter, if you are wanted to show something better results and thinking that, in the next quarter, I will somehow manage and come back to my original thing, and it never happened. And it continued for years. This is the best example we have to learn. So when we try to deviate for the first time, I think there should be proper check and balance, and we don't deviate from the principle which we decided to adopt. And if that is being done, I am sure the corporates can travel smoothly, and that life expectancy can definitely be expanded beyond the human life, and it will be good for the future. Because whatever we are talking today, I think the benefits will be derived by the people maybe a decade or two later. So when people talk about climate change, people who are 50 plus today, I don't think in the next 20 years we are going to see the difference. But after 2 decades, that is when the next generation comes into this corporate world and then tries to take this economy and the country forward, they must imbibe a culture which will not, which will actually stop them when they want to deviate and when they try to deviate for the first time. So I look forward that corporate professionals continue to bring this type of programs and more and more on ethics, so that that is where there is a large scope for people to deviate, because in this fast-moving world, whether it is food, whether it is movie, everybody wants to watching OTT, everybody wants to order food from online. So we need to even import certain ethical principles even through this platform of using the technology, so that the generations to come is benefited, and we leave a legacy which our children will definitely be, respect and adore, rather than say that, the people who have left this planet have left behind a bad thing for us to correct it. So I wish once again corporate professionals, congratulations for conducting 100 seminar, which is absolutely a commendable achievement. And I know Mr. Pawan for almost 30 years now, and I know he's what I can say, once he decides to do something, and how much involvement he takes, and how tirelessly he gets involved and puts in so much of efforts, and that is clearly visible in this effort. So I also thank you for inviting me, and my congratulations are there to the full team of corporate professionals for organizing such wonderful webinar every fortnight or rather every week. Thank you very much, sir. God bless you, sir.
Thank you very much. Thank you, Sundarshan sir, for your kind words and your support, which is always with us. Thank you very much. Now, another regulator who is looking after, who's taking out the bad companies from business and making them perfect. That is Insolvency Board, and the Executive Director of Insolvency Board, Mr. Santosh Shukla. I'll request him to speak about this.
Thank you very much, Pawanji, and I also congratulate you for organizing this excellent webinar and achieving this 100 mark. And I wish that you continue, that you are being, as your name suggests, you are a corporate professional. So I wish you that you continue to organize such excellent corporate governance programs, so that we can imbibe some good educational learning for the boards. I think much has been said about the corporate governance by my previous speaker, so I will not go into the background as such, but definitely how the insolvency code, which presently I am administering in IBBI, would be a complementary instrument for the corporate governance. So I will just touch upon, of course, Dr. Sahu has spoken very beautifully about the three enemies in the corporates. And one such area would be the insolvency code, which somewhere dealing with such sort of enemies. I will just touch upon the sort of principles which the code has enunciated. Of course, the code is not talking much very clearly about in the language about the regulation on the corporate governance, but the provisions are to great extent complementing to the corporate governance norms. As Dr. Sahu said, that company have perpetual life, and today he very beautifully highlighted that the life of the corporates is now much lesser than the humans. And the intent was to create a perpetual entity to flourish the businesses. But businesses are failing, companies are going in distress. And of late, we have been observing that the business failures and corporate failures have been on the high side. I personally feel that, of course, there could be mismanagement and bad management responsible for this, but the market forces are also to some extent responsible for this. The technological developments and innovations, I think business disruptions have become sort of very normal happenings. And we live in a world where we don't know, we cannot see that much foresight that the companies will be having a longer life or shorter life, but definitely what Dr. Sahu suggested and highlighted, that the management must look for the sustainable growth and sustained businesses. The code basically has inculcated and initiated the corporate destruction in a constructive mode. So that is why the BLRC has conceived it as a constructive destruction, not as a killing the life of the company. And that is why the first and foremost object of the code is the rescue or the resolution of the corporate. We live in this world, and if I quote the US Secretary of Defense Donald Rumsfeld's statement, and he said that we are living in a world when there are known unknowns. There are things we know. We also know there are known unknowns. That is to say, we know there are some things we don't know. But there are also unknown unknowns. The ones we don't know, we don't know. And if one looks throughout the history of the corporates, we are in the latter category. We are in the latter category of unknown unknowns. We don't know what we don't know. And that is how the code is trying to address this area. That businesses' failure would not be a rule of happening. It could be exceptional. Because the closure of the company destroys the organizational capital. It also damages the employment to some extent, and also the confidence of the investors. That is why the code is talking about rescuing the company as a first resort and dissolution or liquidation as a last resort. The committee of creditors have been given complete and ample powers to decide whether to close the company at the first instance itself if there is no viable business. The very objective of the code is the time-bound resolution, and the reason is this, that the value should not be lost because of the delay in the resolution. The code endeavors to save the life of the company. It is beneficial legislation, which is intended to bring the company back on its feet first, and not necessarily a recovery legislation for the creditors. Though creditors have been given the paramount powers to decide whether to resolve or liquidate, but it is not the intent that they should resort to the recovery mode and kill the company. So a lot of responsibility is now on the creditor, and that is how the creditors also become a stakeholder for the revival of the company, and to some extent, the corporate governance for such creditors are also a desirable thing. Today, I think there is a vacuum in the code about this, but there is a need for this. It is also very relevant to mention that Section 29A, which was inserted very late in the code, which disqualifies the erstwhile management, who really doesn't want to continue the company or revive the company. And the Supreme Court very clearly said the objective of this section is to facilitate effective corporate governance and to avoid the backdoor entry of the erstwhile management. So the code is also enshrining itself that the persons, the directors or the managements who have been failing to revive the company should not come to the back door of the resolution. The code has also conceived the dealing with the avoidance or undesirable transactions, where the value has been lost on account of undesirable transactions, which we call the preferential transactions, undervalued transactions, and fraudulent transactions with the related parties. The preceding 2 years, in the preceding 2 years, then the IBC allows the clawback of the value of the company. It also mandates a retrieval of the value lost to the failure of the exercise of due diligence. There is a twilight zone between the filing and the admission, during which the management has also an opportunity to wipe out the debt and revive the company. So the code is also giving some sort of balancing this interest and the balancing tools, that if the promoters wish to continue the company, they have still the opportunity. And the data, if you see, shows that maximum amount of money has been recovered or value has been maximized to the withdrawal before the admission. So the people talk about the withdrawals are much and the resolutions are less. But if you see the impact of the code has brought a very great impact of the behavioral change, which is playing as a threat on the existing management, that if they may lose control, if they are not behaving well. That is how the code is somehow supporting or facilitating the corporate governance in India. OECD has very recently recognized that the good results insolvency regime would facilitate better corporate governance. No doubt the reforms made in the Indian corporate governance model are transparent, they demand fairness, and they are much at par with the global norms. But my personal feeling is this, that there need to be further understand the underlying issues affecting corporate governance in India. Particularly, as Dr. Sahu suggested, the management should be very careful of the three enemies in the corporate. Why the company which has been created to live a longer life, if not the perpetual life, why should it die? It die the untimely death of 10 years. SEBI and the governments have been prescribing the disclosure norms, but I think the time has come that some sort of best practices, of course. I mean, corporate governance was initially thought of as a best practice. Somehow it is now creeping in the rules, but I still feel that it is more on the accountability and the responsibility owned by the management rather than the rule. Rule can govern the conduct, but rule cannot govern the conscience. And I personally feel that the corporate governance is a matter of conscience. The management need to realize that the practical and positive influence of governance ultimately helps them for the financial performance and compete in the market. If they fail in this, I think the untimely death of the company will ultimately lead to the loss to the economy. And I think such type of programs definitely, I think, help. And I would also request Mr. Poman continue such programs and include the insolvency sort of chapter in the corporate governance. I personally feel that this is an area which can be further developed for the corporate governance, because still there are certain gray areas in respect of the management of the failing firms. Of course, when after the admission, the resolution professional has been given the obligation to comply with all the rules regulations, including the corporate governance rules regulations. But the corporate governance failures which are leading to the untimely death of the corporates and erosion of the value, that perhaps could be dealt with by bringing out more awareness and creating an atmosphere in the minds of the corporates. Of course, the company law is a great deal dealing with the disclosure requirements. But I think something more need to be done on the enforcement and implementation of those rules and regulations. With this, I would close my statements. Thank you so much.
Thank
And
you.
again, congratulations for your endeavors. Thank you so much.
Thank you very much, Santoshi. Thank you very much, giving the prospects of the insolvency and governance. Now, Savitri Parekh, our alone woman speaker, because that was also required for gender equality. And he's company secretary of Reliance, one of the biggest company in India, and her prospects about this subject. Over to you, Savitri.
Thank you very much, Pawan. First of all, a hearty congratulations to you and your team for a wonderful webinar and completion of 100 sessions, today being the 100th one, is certainly a great milestone. And these sessions have been, as was also spoken about by all the speakers before me, these sessions have been widely attended and very much appreciated for the kind of topics that you've selected. Talking of corporate governance and excellence in corporate governance, this is a very apt topic that you've taken for the 100th session today. Excellence in corporate governance, I would only say that all the speakers before me have brought in the different dimensions. If I were to sum it all up in one single sentence, I would say that it's about doing the right thing. And if you do the right thing, the behavior is also going to be aligned to what your intent is and the manner in which it is done. In fact, that's exactly what was said by all the speakers before me. If I were to quote Mr. Manoharan, where he mentioned about ends and means, ends do not justify the means, and the means to reach the end also need to be fair and done in a proper manner. He quoted Gandhiji in saying this. I also liked what Dr. Patnaik mentioned, Dr. Amar Patnaik mentioned about a very nice acronym of FAT, where he said fairness, accountability, and transparency. In fact, if I got some time to mull over this, and I quite like this acronym because fairness and transparency is disclosed in all the disclosures that are made by the organization, whether it is to the stakeholders or to the prospective investors in whatever capacity, or to the employees or any other person. If there is a consistent communication which is underpinned by fairness and transparency, I think one major aspect is taken care of. The other aspect is about accountability and creating an owner mindset, ensuring that each person feels one is accountable not only for the properties of the organization, but also treated as a subset of the entire country's assets. And that's exactly the mindset that is required, because we also owe something to the future generations, whether it is in the form of natural assets or otherwise. And we also need to leave behind a great and a superstructure of an organization when you talk in terms of perpetual succession, which was also very beautifully brought out by one of the speakers before me. Being the last speaker, I have the advantage of quoting from the earlier speakers and just building on it. But if I were to talk in terms of corporate governance, the way I see it, I would say that it's a tripod. It's a tripod between structural governance, operational governance, and transactional governance. Structural is taken care of by the different laws in the country. We have Companies Act as well as LODR, which specifically refers to the mix or the composition of the board, size of the board, tenure of the board members. These are, to me, the major guardrails which are set to ensure that there's a fair amount of thinking, and these are the practices which will stand good even over a period of time. So if the structural compliance aspects are taken care of, these were not exhaustive, I just gave a couple of examples. Then we move on to the operational ones. As a company does operations on a regular basis, some of these structural points, like say, for example, the Companies Act as well as LODR, refer to the different committees of the board as well as of the board. How exactly would it function? We also have the secretarial standards, which mandate a particular time, a particular notice period, or the manner in which the minutes would be captured, or for that matter, even circulation of the draft minutes, so as to ensure that there is no ambiguity, there is no gap in information, even among the persons who are deciding on these matters. As all of you would have seen, this has certainly reduced vexatious litigations with respect to operations of companies. So I would put it in the second box of operational governance. And the third, which is very important, is the one with respect to transactional governance or transactional aspects of governance. And I would put one big one, which was also referred to a little while ago by Mr. Shukla, where he mentioned about related party transactions. When you talk in terms of transactions, the first thing that comes to our mind is one of related party transactions. How do you determine as to what the company's stand would be, and how do you actually operationalize it becomes important. Or for that matter, even contractual compliances play a very important role, because if you do not take care of the contractual compliances, you might suddenly be hit by something big which comes up later. So just ensuring that you have a proper process put in place, and internal processes certainly need to be robust. If you were to peel the aspects of corporate governance, another way of looking at it is about people, processes, principles. And when you talk in terms of processes, risk management also plays a very important role. And principles, because it is the manifestation of these principles which is shown in the form of behavior, and which also adds up to culture. But I would put it simply as people, processes, and principles which add up to corporate governance. And to have excellence in corporate governance, you need to have these different pieces properly put in place, communicated in the right manner, and this would automatically ensure sustained performance for the organization. Of course, it is presumed that what you're doing is the right kind of business, which also needs to be reviewed from time to time. You would have the strategy and the rest of it. Those are with respect to the domain of the organization. But unless and until these pieces are reviewed, properly put in place, it will be difficult to have sustained excellent performance. We've been talking in terms of best practices. If these are followed consistently, that itself becomes a benchmark of best practices. Thank you very much, Pawan. Being the last speaker, I know we have already overshot the time. I don't want to be belaboring the same point. And congratulations once again.
Thank you very
Thank
much,
you.
Savitri. Thank you. Always we have seen that ladies first, but we are closing with you this 100 webinar. So you are the last speaker of this. So today, when we say that we have completed 100 webinar, it means that you have completed 100 webinar. So credit goes to you. Your contribution was excellent. You were in so many webinars. You were there. You have shared your knowledge in various subjects. So thank you, Savitri. So friends,
My pleasure.
now the time has come that we should end this program. And I should say one thing I can tell everybody that this journey of sharing knowledge will continue, because this has given lots of knowledge, awareness, and the feeling of giving. So the best thing is, if you share knowledge, your knowledge will always enhance. That is the concept which we have created in our organization and will continue. So thank you very much all. My special thanks to Mr. Amar Patnaik, Member Parliament, Raju Vistaji, the Member Parliament, Prabodh Saxena sir, the Additional Chief Secretary, Government of Himachal Pradesh, Mr. S.K. Monti, this whole-time member SEBI, Mr. T.N. Manoharan, Chairman IDBI Bank, Parvati Sam, the Company Secretary of Tata Steel, Amit Mohan Govil, Director General Central Economic Bureau, Manish Mohan, the advisor CCI, Mr. Sahu, the chairperson of ex-chairperson of IBBI, Mr. Sundareshan, ED of SEBI, Santosh Shuklaji, ED of IBBI, and Savitri Parekh. All have given their views, all have given the new dimension from their point of view, which was the object of this program. Because this is a 100th webinar, we can't do justice other than this, that we got the views from everybody, that what is their views on this, how to excel in governance. Everyone has worked in their area, and they have come out with these so many innovative ideas related to tangible, intangible, 3 types of things, and various other aspects, which is in number. So my thanks to all participants, those who have come in large number. Today we have more than 400 people have attended this program. That is a best part. And I thank my participants, especially those who are taking time and attending program. So thank you very much, friends, for your participation. So this journey will continue. Our next program is a 101st program, that is on 25th November on amendment in LODR, consultative paper on review of disclosure for material events or information under regulation 30 of LODR, that we will do the program. And it's a very interesting program which is coming out, because now SEBI is suggesting that you have to inform and you have to discuss and give your comments on rumors. So that will be very interesting program, and we are tying up with various people, because SEBI has proposed 250 top companies. So we will call the company secretaries and the CFO of these companies. So thank you very much to all for your participation, helping, supporting, and encouraging. Thank you very much.